It's so deeply rooted in our culture that most people never question it. The lie is simple, that the number in your bank account is the ultimate measure of success. That as long as the figure is big enough, you've won the game. But history, both economic and personal, tells a very different story. That story is about people who had more money than entire countries, yet ended up powerless, ruined, or forgotten. And it's also about others who never held vast fortunes, but built something far more durable. Value. Real value. The kind that doesn't evaporate when the market turns. If you understand the difference between wealth and value, you'll see why most people are chasing the wrong prize. Let's strip the illusion away by starting in one of the wealthiest courts in history, France. Under King Louis XIV, by the early 1700s, the Sun King had turned Versailles into the center of European luxury. Gold leaf, marble halls, elaborate gardens. The entire palace was a monument to wealth as display. Nobles spent fortunes keeping up appearances, importing silks from China and sugar from the colonies. On the surface, France was unimaginably rich, but the wealth was brittle. The economy relied heavily on war plunder, colonial extraction, and debt. Taxes fell on peasants, while the nobility and clergy contributed little. Enter John Law, a Scottish financier who tried to fix the problem with paper money. At first, it worked like magic. Fortunes multiplied on paper. But it wasn't real value. The Mississippi Company's profits were inflated and its land oversold. When confidence collapsed in 1720, the paper wealth vanished almost overnight. Those who had kept tangible assets, like land and production skills, weathered the storm. This was an early example of the difference between apparent wealth and intrinsic value. The pattern repeats everywhere. In the 1920s, American investors rode the stock market like an elevator. Cars, radios, and skyscrapers symbolized unstoppable progress. Bankers and speculators leveraged themselves, creating fortunes from thin air. But when the crash of 1929 came, that wealth evaporated. The only survivors were those whose assets still held utility. Farms that could grow food, factories that could produce essentials, businesses that solved enduring needs. The same lesson ignored in France was ignored in America. Money is a claim on value, not value itself. Here's the uncomfortable truth. Most of what we call wealth today is fragile. Stocks are priced based on future expectations, not guaranteed output. Real estate values depend on interest rates, not just bricks and mortars. Currencies are only as strong as the trust people have in the institutions. History shows how fast wealth can turn to dust. The Weimar Republic, Zimbabwe, and Venezuela all learned this the hard way. People who measured their fortune in local currency went broke, while those who had value in hard assets or transferable skills preserved their prosperity. So, if wealth is the number, what is value? Value is the capacity to produce, to endure, and to be useful. It could be a skill you can trade, or a network you can rely on. It holds when markets panic. It holds when currencies fail. It holds because people need it. And need is the most resilient currency of all. Look at Japan's economic bubble of the 1980s. The land under the Tokyo Imperial Palace was said to be worth more than all of California. But when the bubble burst in 1991, trillions of dollars vanished. Yet, the country didn't disappear because Japan still had real value. An educated workforce, a manufacturing base, and a culture of quality. That was value. It provided the foundation to recover. The modern financial system blurs the line because confusion is profitable. Governments prefer citizens who measure success in numbers, not resilience. In ancient Rome, true power came from controlling grain, oil, and wine. When the currency was debased, those with assets kept their influence. Real financial freedom comes when your life doesn't depend on a system you don't control. This means owning productive assets, land, tools, or technology. It means mastering a skill that will always be in demand, like coding or construction. Relationships that provide protection when formal systems falter. Wealth without value is like a castle made of sand. Understanding this difference gives you the power to build something that lasts. History has the answers. Hit subscribe to find out more.